Welcome to RANsquawk's morning briefing for Friday the 19th of February 2010. In terms of one of the major stories that did break after the US closed yesterday, around 4:30 in the afternoon in New York, so 9:30 here in the evening in London, and that was that the Federal Reserve somewhat surprised the market by hiking the discount rate window by 25 basis points to 0.75%. In terms of the market reaction, at the time of that release, T-notes did fall, as too did the stock futures in the US, and the dollar did catch a bid, although the moves weren't too massive. That has fed through slightly in terms of how London and Europe has fared so far today, with stocks marginally lower. We're down around 0.25% in the major indices, and with bond futures, that was also given some momentum to the downside after some stops were triggered on the break of the lowest levels from yesterday's. So bonds are also trading lower at the moment. As to our gilt futures, still a lot of concern there in terms of the finances, that's the public finances in the UK, given the deficit size that we saw yesterday in the economic data. In terms of actual commentary as well that came from some Fed officials, both Bullard and Lockhart spoke overnight, and they were very clear to point out that the latest hike in the Fed discount window is not a precursor of anything in terms of the interest rate policy, in terms of the federal funds rate. So looking forward then in terms of things to come from the US, we'll be looking out for the CPI data. In terms of what we've already had from Europe, we saw the Eurozone manufacturing PMI coming quite a lot stronger than expected. That has helped support some of the prices in equities, although as mentioned they still remain in minor negative territory.